Hi, my name is Ketan Das. I am a PF expert at FinRight. We've helped 10,000 plus customers withdraw their PF successfully, and here's me answering top 10 questions on Reddit. First up, issue regarding EPFO PF transfer and family pension settlement for deceased employee due to unreachable employer. Well, before reaching out to the employer or visiting the PF office, it is worth trying the EPFO online portal and checking if you are able to access it as a nominee. If the e-nomination would have been done by the deceased member, you will be able to access this portal. If you are unable to do this and the employer is also not reachable, in that case, you have to visit the PF office where the last contribution was made. There you have to go and submit a clarification letter, tell them that the employer is not helping you out and you need to initiate a withdrawal. What the PF office will do is they will initiate the transfer from all previous accounts. Internally, they will reach out to the different PF offices where your money is lying and they'll get it transferred and give it to you. Ideally, their turnaround time for an online death claim is 3 days. But in this case, since the funds have to be transferred from a previous organization, it might take over a few months. All right. Next, seriously, Sam has asked this question, is it wise to withdraw the entire PF amount during unemployment? Well, if you are unemployed, your PF contributions still remain in the account, then you will continue to earn interest till the age of 58. That is, if you have left anywhere before the age of 55. However, if you have left after the age of 55, you will continue to earn interest only for the next 3 years. So take that into consideration. Second, the interest that you earn will be taxable as per your tax slabs. So right now, if you are unemployed, you might not have other income or direct salary income, but if you have other income, for example, rental income, then the EPF interest will get added on to it as a other income source. So effectively take your tax slab into consideration and then decide. By the way, EPF is one of the best debt instruments out there. It's government backed and you're continuing to get interest. So just take that into consideration. If you want to have a debt portfolio, put it on EPF, but if you need the funds, feel free to withdraw. Next, help me understand the claim rejection reason. Well, anytime a claim or a transfer is rejected by EPFO, you will receive 2 rejection reasons. Ideally, you should focus on the first one as it is the primary rejection reason. And oftentimes, it might be something complicated. It might be written in a format that you might not understand, right? But second reason is often something that is mandated by EPFO. EPFO has to give you 2 reasons of rejection, right? So the first one is the primary one that you should focus on, but the second one is oftentimes father name differs, claim already settled, KYC issues, and people oftentimes remember this one. They check that my father's name is correct, why am I still getting a rejection? The idea is to focus on the first one. Sometimes it is encrypted, it may be EPS contributed even after 15,000 wages, right? These are some cryptic type of rejection reasons. We'll do a detailed video on this. Next, 2 UANs with overlapping PF contributions, can I merge them? This might not be a good idea. If you have overlapping contributions, you will run into trouble when you're trying to withdraw those funds. So here's what you have to understand. If you have genuinely worked in 2 different organizations at the same time, right? In that case, you need to get a clarification from both the employers stating that the working hours were different, both the organizations were on board with it, and that's why you've received 2 different contributions at the same time. Here, there is another caveat, your pension contributions. If you are a pension member, your pension contribution should only be given in one organization. You cannot be a pension member in both the organization at the same time, even if you have the offer letters from both the organization and both the organization are okay with you working there. In the other case where your contributions, you've worked somewhere and the other organization is not aware of this, in that case it's not wise to merge those accounts because you'll run into trouble. And in any ways, you have 2 different overlapping UANs, right? Treat them as 2 separate UANs and go for a withdrawal, although you might have to consider the taxation impact. So anyways, getting the money is more important. You might have to pay some tax on it. It's fair. Just apply for a withdrawal from both the UANs separately. Do not merge them. Next, under claim status showing as claims settled but still not received. Well, it could be potentially due to 2 reasons. First, that genuinely there is a delay when EPFO says that the claim has been settled. It takes time for the money to come into your bank account. Even the PF officer, once they've settled the claim, it moves on to the accounts department where they process the request into your bank account. This process can take anywhere between 3 working days to a week. So first thing, is it between a week? Then probably you will get your funds within this week, so no need to panic. Second, if it has been more than that, then there might be some other issues that might be affecting your claim. For example, if your bank account or IFSC doesn't match, in that case the money will bounce and it will be refunded back into your account. It will take some while for the money to come back to your PF account, but do check. And here's a quick note, if you were a Citibank customer, they were acquired by Axis Bank and your IFSCs had changed. So this could be a possible scenario where your IFSC changed and the money did not come into your bank account. Need expert opinion if my money is supposed to go into EPS? Well, that's a great question, but technically it's not under your control whether you can choose to be a part of EPS or not. I'll explain. If you've joined before 2014, by default you are a member of the EPS scheme. You don't have a choice, you will contribute and you will continue to contribute. But if you've joined after 1st September 2014, that was your first job, you got contributed to PF for the very first time, your UN was generated, there you need to check if your basic wages per month were above 15,000 rupees. If the basic wages were above 15,000, you are not eligible for EPS, and that's a great thing. I'll explain more later. But if your basic wages were less than 15,000 per month, you don't have a choice, your pension will be deducted and you will continue to contribute. Why I'm saying EPS is a good thing that you're not a part of it is because that 1250 that gets contributed to pension, later on when you retire at the age of 58, the maximum that you can get as part of pension is 7,500, which will not be meaningful. You are much better off to keep that money as part of PF and earn interest on it every month. So that 1250 stays inside PF and you'll continue to earn interest on it. So that will be better for you. I hope that answers your question. I have EPF account with 4 different companies, all under same UN. How do I merge them into my current account? Do I need to do this one by one? Well, it's a good thing that all your 4 different companies are under the same UN. What you need to do is go to the EPFO member home portal, check out the online services and click on one member, one EPF account transfer request, enter your UN number, click on get details and you will see all 4 different companies there. You can select all 4 of them at once. You do not need to transfer them one by one. Select all of them and the money will be credited into your current account. Next, we have question, before transferring applied for Form 19 and 10C. Well, that's a little unfortunate because you might run into some trouble later on. I'll explain for both the forms one by one. But in case your Form 19 and 10C is still under process, go ahead and raise a grievance, ask the EPFO office to reject those withdrawal requests, both Form 19 and 10C. See, if your Form 19 gets settled and the money later on comes from the old account into the current account, in that case, money you are trying to access after a Form 19 has been done will face a rejection. You will often run into a rejection stating that Form 19 has already been settled, then you cannot process the Form 19 claim again, which is for your PF withdrawal. So in this case, it's better off that you pause the request or get the PF office to reject that Form 19. But just in case this has happened to you, you will have to apply for Form 19 again once the money has been transferred. But in this case, again, you will have to raise a grievance, write a clarification. Why did this happen? What was the mistake? This is still salvageable. But when it comes to Form 10C, if the Form 10C has been done once or if it has been settled once online, then you will not be able to apply that Form 10C again, which is a hassle. So now in that case, you will have to go to the PF office, fill an offline form, take an attestation from the employer and then submit. This is a huge hassle, so you're better off just getting that claim rejected before it is settled. How to withdraw full amount PF balance? Well, before you withdraw your full amount from your EPFO account, first you have to verify whether you have transferred your amount from all previous companies into the last one. This is a very important step. I just answered the question on what happens if you withdraw before you transfer. So now if all the funds have been transferred, make sure your Aadhaar, your bank account and your UN all have the same name, same KYC details. This is very important, otherwise your claim might get rejected. Once all of this is in place, Go to the EPFO portal, click on online services, select Form 19 and apply for a withdrawal. You will receive your money within a month. PAN KYC approved by employer but still pending for digital sign on EPFO. How long does it take? Well, if it still shows pending for digital sign, then it is worth checking with your employer again. Do they have a valid e-sign in place? If they do, they would have approved it, and then it takes some time for the EPFO portal to update it. Hardly within a week it should have reflected. If that is not the case, then it's worth trying to reject this and apply it again. Next question is, EPF balance is growing but still feels confusing. How are you guys actually tracking and managing it? Well, EPF is confusing. There are a lot of issues that happen when you try and withdraw, but there are things that you can do to prevent those issues from happening. First, we'll answer the question about tracking it. You can go to the EPFO Umang, you can go to the EPFO passbook portal and check your PF balance there. You can also go to the Umang app and check your balance there. But it's just superficial. It will tell you the amount. It will not tell you the detailed answers on contributions, whether or not some contributions have been missed, whether there is something incorrect in your account. For example, the passbook doesn't tell you if you have KYC related issues. It doesn't tell you if the employer has missed a contributions, right? So if you want to have a deeper analysis of these issues, do check our Check My PF product. It's on our website. It's a easy to access tool where it tells you, it runs you through 7-8 different checks. It talks about your service history. Is there an overlap? It talks about your contributions, whether they're accurate or not. It talks about your EPS service, whether you're eligible, whether the contribution should have been made, and much more. It's available for free on our website. So next, there's a question about NCP days and reason of exit. So NCP days is non-contributory period days. This happens when you are employed at an organization, but you have taken leaves which are unpaid leaves. In this case, since you're not getting salary, you will not be contributing to PF. So if you have a situation like this, in that case, your NCP days has to be marked by the employer. Sometimes when you travel outside the country, when you're getting paid for a few months from an outside payroll, then in that case as well, your contributory days cannot be marked. Non-contributory days have to be marked by the employer. Now, reason of exit, in most cases, it has to be cessation or short service. If you have left an organization and joined another organization, then this is the reason that the company has to mark, which is cessation or short service. Apart from this, if you have left EPFO and you've retired, then superannuation is something that can be marked. Otherwise, if in case someone passes away, then death in service is something that the organization does mark. Well, if you have more such questions, feel free to drop them in the comments and we'll answer them in our upcoming video. If you still need expert help in managing this, then please visit our website, raise a request, and we'll give you a call back and we'll help you resolve your EPF issues. Thank you.